the way we've been able to accelerate trust in the Philippines, even though we have half the amount of customers, but I think more importantly, we actually have almost equal the amount of deposits now.
Wow.
As South Africa.
Welcome to this episode of Couchonomics with Arjun in collaboration with the Founders Speak Unplugged. We're beaming in directly from SFF, which is Singapore FinTech Festival. It's day one. We're a few hours into the show and it's utter madness outside with the number of people that have sort of visited. As someone earlier today was saying, this is the Olympics of FinTech events. Joining me on the chair across, I guess, the room is someone I met last year when I ran a forum which focused on why digital banks fail. But before we get into why digital banks fail or succeed, and hopefully they succeed, let me welcome...
We haven't failed yet.
Yep, there you go. I'd like to welcome Nate Clark. Nate is the CEO of GoTyme Bank, which is out of the Philippines. It's a market that I know very little about, and therefore my interest levels are that much more high, because I not only want to hear everything about GoTyme, but also the Filipino market.
Yeah.
Nate, welcome to the show.
Thank you for having me.
No, appreciate it. Again, awesome event. I don't know if you were here the last 2 days this time around. Did you do the Insights Forum?
I did the Insights. We had an event in the Insights Forum yesterday, but literally I walked in 5 minutes ago to this event. So.
Okay, well, welcome. Welcome.
I'm less tired than you. You've been going all day.
I wish we could offer you some water or some coffee, but unfortunately, it's a health and safety. No, it's not. But we don't have tables out here. Nate, let's just. I guess the audience we have is quite global or quite international, right? I think a lot of people are in a similar boat as me, where they would not have heard of GoTyme. They might not have even heard of the Filipino fintech market and some of the interesting things go on. So let's start with the genesis of GoTyme in Philippines. And, you can talk a little bit about
history.
The group itself.
Please. The story starts actually in South Africa back in 2012. So it's actually been a very long and winding journey.
Okay.
Actually started as a B2B business.
All right.
So we were actually operating MTN mobile money in South Africa. So Time, for its first half or less than half, 5 years, didn't have a consumer-facing business. We were essentially design, build, and operate digital banks. In that case, more of a mobile wallet in South Africa. And then we did a second one in Namibia. And then only in 2018 did we say, listen, this has been a great journey. We've learned a lot, but we really actually want to have full control of our destiny to build what we kind of envisioned to be a large multi-country digital bank. So then we ended up securing a license in 2018 and then launched in early 2019 Tyme Bank South Africa, which is the first bank. For context, Tyme Bank South Africa is quite large now. It's just hit 10 million customers, is now profitable after just over 5 years. And however, to get to the second part of the story in the Philippines, 3 years ago, we did a deal with the Conway family, hence the Go in GoTyme Bank.
All right.
To apply for a license in the Philippines. They released digital licenses in 2020. We got one in 2021 and then launched. We just had our 2-year anniversary.
Oh, congratulations.
And it's going.
But why Philippines? And
why Philippines,
South Africa, Philippines, is there something I'm not...
Yeah, it sounds random, but a little bit less random than you think. One element is rooted in our operating model, which I can talk about a bit more later, which is quite differentiated in that we integrate into retail ecosystems. So it's not a pure digital play. We actually have this kiosk and ambassador in retail stores. So we have this half physical, half digital distribution model. And in order to make that work at scale, you need consolidated retail. So we kind of liked what had happened in South Africa with that model. So when we looked up Africa as a natural first place to look, we saw that retail is mostly fragmented, highly fragmented. The exception maybe is Egypt. We looked a little bit in Egypt, but then when we looked over into Southeast Asia, that was the big thing. So we were looking for consolidated retail. We were looking for other regulators that were open to digital, friendly to cloud, large underserved populations, and Philippines. On the desktop research kept on coming up, one or two. But then what it really came down to in the day is finding the right partner. And it was a bit of serendipity. It was all during COVID, actually. The Conway family at the time was looking to, who's the second largest retail in the Philippines, they were looking to have a digital play because they actually, by kind of relative terms versus their other businesses, at the time, a very small bank, traditional bank. So they wanted to make a large digital banking play. We kind of knocked on their door and said, hey, we build digital banks and we want to partner with a retailer. So it happened very quickly, actually.
Very interesting. I'm gonna ask you or request you to sort of kind of zoom up a bit,
Yeah.
right? Talk us through a little bit around the general financial services sector in Philippines. How are you seeing disruption, innovation? I had a very interesting conversation with the chief strategy officer of GCash, which I think is one of the, if I may say, poster child
Absolutely.
players out of Philippines. But very keen to hear a little bit about what's happening in Philippines. Paint a picture for us, please.
Yeah, the broad brushstrokes are it's extremely underserved, right? So pre-COVID, when before Gcash and Maya had their kind of the e-wallet explosion, there was very little digital financial services adoption, even at an account level. While the payments adoption has gone exponential in the last kind of 5 years there, it's still a big laggard in the region and globally on credit penetration, insurance, and investment. So, less than 5% of the population has bank credit, has one of the lowest kind of household debt to GDP ratios in the region. And so there's opportunities across. The basic transactional banking is underserved. If you exclude e-wallets, it's only about 40% banked. If you include e-wallets, I think it's about 60. But then it gets more and more underserved as you start talking about more of the higher quality banking products or the higher level banking products, so credit, investments, insurance. So it's a market that is very nascent, I would say, even compared to a market like South Africa.
And I'm assuming then that leads me to believe that obviously your bank is anchored into this concept of financial inclusion. Is it just because the market is big enough and there's so much room to play that all of you are getting there? Talk us a little bit about how you guys are different. You talked about you're anchored into retail, into I guess a retail ecosystem.
Yeah.
How does anchoring into a retail ecosystem, the need for being included, observed, sort of come together?
In financial inclusion, I think is quite a broad
a
broad term, right? So I would say we're doing financial inclusion in that we are targeting to give high quality banking to, we call actually more like preferred banking and preferred banking experience to everyone. Because the construct of the Philippines market, and I think one of the big drivers as to why it's so underserved, is it is very much a conglomerate-led economy.
Okay.
So the big kind of families are, including our partner, have multiple businesses. And in the Philippines, there is no bank that is a Citibank equivalent of just a bank. All of the largest banks grew out of large conglomerates. Arguably only in the last kind of 10 years have they been focused outwardly to the market with a lot of hard dedication and absolute focus, whereas before they're also serving their own ecosystem, their businesses, et cetera. So that allows us to not only go after what traditionally, you talk about financial inclusion in emerging markets, you go after like the bottom of the pyramid. Actually, we are going after all even aspirational segments. And this is actually quite different than South Africa. South Africa, 80% banked, the middle class is really well served. In the Philippines, the kind of underserved mass market income levels are underserved, obviously, but even the kind of mass affluent is quite underserved. So we're going after, I guess we're competing head to head with the incumbent banks.
Interesting. So and I think this conversation even came up last time, and I don't know if it was you who said it. I don't remember. There was 14, 15 of us around that table, but we talked a little bit about trust, and we talked about that. One of the reasons why digital banks need patient capital is because it takes time to build trust.
Yes.
A lot of the customers, especially the ones who are a little better served, right, who are not necessarily underserved. Or unserved entirely, they're underserved, are happy to do transactional banking with digital banks or the new kids on the block. But, their real banking where they're actually putting their large deposits, where they want their big, their mortgages and their loans from, typically stays with the traditional players. How are you guys then sort of being able to overcome that, I guess, consumer behavior?
That trust barrier. I might have been one of the ones saying, I think everyone's being too impatient here.
Right.
Building a banking franchise is like,
it was Chatham House
decade
rules,
long.
right? It was Chatham. I cannot remember who said what.
It was a while ago. Yeah. So we have a couple hacks, you say, strategy wise. I mean, it does take time, right? I mean, we kind of see after 5-6 years in South Africa, you start to get a step change in how much money people put with you, right? The way we've been able to accelerate trust in the Philippines versus South Africa, even though we have half the amount of customers, so like we have 5 million, they have 10 million. So we're growing faster, but I think more importantly, we actually have almost equal the amount of deposits now.
Wow.
As South Africa. And I think that is quite a good gauge for trust, is how much kind of the average balance is with the customers' balances. In the way I think we've done that, one, by I think doing a better job targeting not just the mass market, but also the kind of more mass affluent, so that the income levels drive that. But the other thing is I think our unique hack on this is the partnership model. So bringing in the GoConway group and kind of as a joint venture and co-branding the proposition, and very much emphasizing that, yes, this is a new bank, but it's actually brought to you by the GoConway family, Lance GoConway, who leads the family. A couple weeks ago, we launched mobile check deposit. Lance, we got him to go on Instagram. He shows our customers how to use it. That ends up going viral because he's very well known. And there's kind of two big reasons we get when we ask our customers, why have you adopted GoTyme? Why, and one is it, very beautiful app, all the typical, I would say, leading digital bank answers, easy, simple, good fees, beautiful app. And the other one is, well, you're backed by the GoConway family. I'm putting my money there. The average deposits, the number of people who are changing to primary bank with salaries coming in much faster versus South Africa, where we had less of that strong link to an existing brand.
This is fascinating, but in a way contradictory. So in my past life, which is quite long, I used to actually run a fintech unit for a very, very large conglomerate. We operated out of 30 countries, and I operated the fintech unit out of 8. We were similar to your partners in the sense it was a conglomerate, it was Middle East. We were in nearly every business you could possibly imagine, right? And actually, we needed to go with banks to gain that trust. So it's very interesting that in Philippines, financial trust, because trust comes in different ways, right? Trust in brand is just one thing, but financial brand is a little bit more different because you're putting your life savings or you're buying your house. It's quite interesting in Philippines, they've actually accepted the fact that the trust is coming out of a non-financial brand, and they trust the bank because they've decided to partner with you. It's fascinating because I'm sure there are other examples like this which exist in the world, but typically I've seen usually it's the other side of the story. It's like a telco which goes into banking and then it'll partner with a big bank. It's a retailer will pile up with the bank and stuff and so forth. So let me then ask you a slightly more, a deeper, partially boring question here, but I get excited about these things. One of the challenges you have, although you can argue that the digital or the Fidgetal model, which I do remember you clearly saying that we're a Fidgetal model, is that you're able to tailor to different segments because the digital element allows you to, and especially if you have other form factors. But does that not inherently create a delivery challenge for you because you have two customer segments? One is clearly unserved, and the other is not delighted or underserved. How much of a challenge, because you're still very young as a bank, right? You're 2 years into your being. How much complexity has that created in the bank in terms of the products that you're developing, in the way you price, in the way you promote, in the way you sell? Or do you really not see that as a problem? You're saying, it just kind of straddles across.
We've been at this now for 6 years between South Africa and there. So we do run two totally different distribution channels,
right? Which
is very different, unique. So there is more complexity, but I guess over time you get better at it. But just to clarify though, and this is actually another big element of, I think, a trust accelerant. We have the kiosk, which allows origination, spits out your Visa card with your name on it in real time, with an ambassador that kind of sells. It's mostly exclusively actually a sales and service. By the way, we do that in retail stores. But we also do that in office buildings, in some other mall executions, but let's say 80% in retail, 20% in office buildings. It's mostly an acquisition play. The customer doesn't go to transact at the kiosk, right? And depending on where that kiosk is located and the ambassador is, will dictate the profile of the customer. So we have, the GoConways have Marketplace, which is a very high-end grocery store. They actually have higher average balances and are more digitally active than our pure digital acquired customers. So we're kind of getting roughly a 50-50 pure digital acquisition for the typical Facebook ads, performance marketing, download, and then we have the other half comes through the physical channel. But the demographic of those customers and the behavior varies widely based on the demographic of the store or the office. But everyone after they onboard and get that card, they're transacting on the app. Just so our post origination, while we have different segmentation, drive different kind of nudges and customer journeys on the marketing side, we don't operate the physical channel as a transacting point, if that makes sense.
Okay, let's switch gears. Last 2 days, all we've heard about is, a million and one new technologies, which are confusing us more than actually solving the problem. Sometimes I do feel that there's more technology going around that we none of us being able to sort of cope up with it. So we all keep nodding and look intelligent. I did a lot of that over the last 2 days, especially when they start talking quantum. Emerging technologies, is that sort of front of mind for you guys, or you're saying something we really are solving for basic problems right here? We don't really need to worry too much about blockchain and AI and all of that good stuff. In good time we'll use it because, as you said, you're building a digital first, cloud native, agile business. Where are you guys on that spectrum in terms of emerging technologies and bringing them into the bank?
I would say we're not a company that kind of differentiates with basic research, or we're not inventing anything new, right? I would say we have business model innovation in that the partnership model, the physical model, we differentiate on execution. Like, we're a multi-country bank. We've done this before. So in general, I would say we're not inventing anything in emerging technology. We're not at the bleeding edge, but from an adoption perspective, we are investing heavily on AI in particular, just because, from a cost to acquire, cost to serve, like a tenth, as you know, of the incumbent structurally, but the incumbents will push to adopt AI, and the other digital attackers, whether it's the e-wallets, GCash, or other digital banks, are going to be adopting. So we feel like we're very well placed compared to the incumbents to adopt, because our data's in one place, much cleaner. So we're already adopting many use cases on the AI side. Customer service. We have automated. We don't yet answer customers with like a ChatGPT interface, but we are suggesting responses in the agents answer in-app chat, email, etc. It's all prompted in social media. So they can edit, and so it's more of a productivity tool now. In the marketing side, we're using it to generate copy. We're using it kind of agentic AI, in that we're kind of combining the AI with the workflow on even things like, we get a subpoena from the police. We need to investigate this account, OCR it. It's like an if then that. We push it into workflow. So we're doing a lot, I would say, around productivity now. We have a separate dedicated team looking at, how does this integrate then into the customer experience? How does this become your, financial advisor? But to be very blunt, we're early days.
Yeah, I know, but so is everybody else. And I think everybody, and most of them who are in early days are actually waking up to the fact that they don't actually have the infrastructure in place,
the data infrastructure,
to actually be able to unlock it. Whether it is the physical infrastructure, the data infrastructure, none of that exists. So I think everybody is in early days. And I'm speaking to one of the AI startup founders later today, where I have a couple of interesting questions to ask him based on the discussion I heard this morning on the panel from the CIO or CTO or the Chief Innovation Officer of BlackRock. Switching gears away from technology, right? From a competitive landscape perspective, I do appreciate there's enough to go after and so on and so forth. Digital wallets have been a bit of a question mark in a lot of parts of the world, right? They go so far, right? But payments gets increasingly and commoditized, and therefore the margins start to go away. They have large customer bases. Most of them struggle to migrate and transition to becoming providers of lending platforms, or they will try and target with banks, and the relationships are complex, and then the regulator is not comfortable. Are you expecting that a number of your so firstly, who are your typical competitors? Are you largely bothered about the incumbents, or are some of these wallets also sort of direct competitors of yours? And how do you see the marketplace sort of evolve from a regulatory perspective? Do you think regulators are going to push all of these people into become digital banks?
Yeah. On a 10-year view, then I'll come back. So on a 10-year view, I see several in the everyday retail banking. So our vision in all markets we enter is to become the largest everyday retail bank in the market, which is actually quite different than some of the other new digital banks that have entered the Philippines and other markets, right, where they're doing more of competitive term savings and then go right into credit, but they're not investing in developing the everyday banking relations, the payment stuff. So I would say our route is more expensive and longer, but then when you get that scale, there's a much bigger prize. So we are, competing head on with the BDOs, the biggest bank in the country. That's where we want to be. I would say in 10 years, if I were to predict it, the top 5 banks, retail everyday banks in the country, are going to be a combination of the best incumbents and 2 or 3 of the new entrants. I guess it remains to be seen what will happen with the e-wallets in the Philippines. I mean, PayMaya already has got a banking license. In the Philippines, they're opening up at the beginning of next year an additional 4 licenses. I'm not sure where the Gcash is going to go. There's been some, rumors in the news about whether they will or will not. But I definitely see the digital banks and the traditional banks converging. I don't think we're actually going to talk about digital banks and traditional banks.
I don't think so, because why would we, right?
It's
Every
just
bank,
a different
exactly.
cost structure and operating model.
Totally agree with you.
But from a brand and strategic positioning, we are very clear that we are a bank. And we think one of our competitive advantages now against those who are kind of fintech or e-wallet is that we're seen more as a bank. And with that comes additional regulatory burden, compliance, risk, but it also comes with additional trust.
Benefits. Yeah, no, it does come with your benefits. So what are the big sort of 3 or 4 things that you can openly talk about that you guys are doing as a bank, right? So, you're obviously you said you're 5 million customers already, which is quite impressive. I think Philippines, about 80 million people.
110.
Oh, wow. Okay, sorry, I'm off by a big number, right? So, but that's still impressive, right? 4.5-5% of the population. And obviously the addressable audience will be less than 110 million. It's an impressive number in 2 years. What's sort of the next few years? What's the focus? Is it just continue to grow customers? Are you widening your product proposition?
Yeah, so we launched with kind of transaction savings and loyalty. And then in the next quarter, we're launching consumer lending and investments. So kind of if you think about the big legs, transactions, savings and investments, credit and insurance, by middle of next year, we'll be scaling on everything except for insurance. So in South Africa, we kind of have all of those legs. So we're just catching up there. So really, I would say next year is about primarily starting to scale consumer lending because of the construct of the market in the Philippines, where it's a very, let's say, data poor environment where you don't have a unified national ID with biometric access. You therefore have very immature bureaus because the credit penetration is low. Those 2 factors means that we felt like we needed to build scale proprietary transactional data, which we are partner with the GoTyme group between Cebu Pacific and Robinsons Retail. They have 10 million loyalty customers. So that will also be a really powerful alternative data set to combine with our own to lend. So next year is very much about consumer lending while we continue to scale.
So it all becomes very real next year.
Absolutely.
No. I'm sure it's been very, very real.
Yeah. I mean,
it must have been an interesting journey for you. Where are you from, if I may ask?
Yeah, I'm from outside Boston in the US.
All right.
This whole thing started as a consulting project in South Africa. I was supposed to be there for 3 months. 12 years later, I'm in the Philippines.
Okay. Give us some sort of nuggets of wisdom from the last couple of years. I'm more interested in sort of your period of when you went and set up GoTyme and ran it. So for fintech founders, who are looking, aspiring, for similar roles as yours or dissimilar roles to yours, but want to give us some interesting sort of observations of being if I may say, a founder of a business in a country that you might never have visited?
I would say overall, not specific to kind of going to a new market, I would say there's, I think one of the biggest arbitrages in business is risk. I think people don't take enough risk. I remember when we were sitting during COVID debating, we were at a board meeting. It was a very tough fundraising environment. We were still burning lots of cash in South Africa. And one of our shareholders almost kicked us out of the boardroom and we wanted to talk about Philippines. Because at the time it was like a crazy high risk idea. When we haven't even broken even in one market, you want to go to a second. But risk and reward. So I would say, always take more risk. Think about what's the worst can happen, which is usually not that bad. So I always encourage people in life and in business to take more risk. In terms of going to a new market, I would say the biggest learning and And I think we've done many things, could have done better, but I think one thing we did really did well is we invested it in a huge amount of time and kind of, we only landed with 5 people from the time group, built everything else from scratch, the team, and just spending my time as a CEO, more than half my time was on recruitment, building the right culture, especially that first core of 20 people. And that's something that
And that makes a big difference.
So yeah, I was like CEO slash CPO. I mean, that was kind of which is fun, but also I think something that when you want to go to a new market and do multi-country expansion, you want to hire fast. You want to go, there's a tendency to just want to go fast and just hire quickly as you're growing. But I think we took more pain of not having enough people and we're patient on the right people.
Great. Nate, I appreciate you coming in.
No, thank you.
Enjoy the rest of the SFF. I'm assuming you're going to be here for the entire week, right?
Crazy, amazing event.
Yeah, exactly. It is. It is an amazing event. And I always walk away from SFF every year with at least 50 new relationships.
Yes.
Some of them turn into proper commercial partnerships. Others just become friends. If I do make it to Philippines,
please,
in the coming year, it is on the list of places to visit. Definitely, I will knock on your door or knock on one of your kiosks or one of the banks, and I'll ask for Nate. But thank you for coming.
No, thank you so much for having me.
Right, great. So, ladies and gentlemen, that was Nate Clark, a native Bostonian who's now in Manila in Philippines, running GoTyme Bank. And it was very nice for him to sort of drop in and say hello to us. So till the next episode, goodbye.